First-time home buyers are saying, you know what, forget buying a home, we'll just keep renting for longer. And you might say, well, Jaspreet, we've already known this because it's so expensive to buy a home. Well, we just got new data to confirm this. Yahoo Finance said that we are now seeing a record low number of people moving out from renting to buying a home. And that's not all. We also got a statement from the Camden Property Trust CEO last week, who came out in his most recent earnings statement and said, quote, the monthly cost of owning a home today is 61% more than leasing an apartment. And that's not going to change anytime soon. Essentially, that it's a lot cheaper now to rent than own when you factor in all the cost of home ownership, which isn't just your mortgage and your property taxes. You also got to pay your insurance, your maintenance, your upkeep, your everything else in between to own a home as well. And you might say, well, Jaspreet, that's only one property CEO. Do we have any additional data to confirm this? And yes, we do, because the CEO of Avalon Bay also, in his earnings statement, came out and said the demand for rentals also continues to be benefited from the differentiation in the cost of owning a home versus renting. Essentially, what he's saying is that the cost of home ownership is now so much higher than renting a home that it's benefiting these apartment communities, because more and more people are saying that it's cheaper for us to continue renting than it is for us to go out and buy a home, pay the down payment, pay the property taxes, pay the higher insurance, pay the maintenance fees, and pay for everything else associated with owning a home. And the reason why for this is, well, mortgage rates are high, but also home prices are high. Now, we saw a little bit of a dip in home prices, if you remember, back between late 2022 and then the early mid part of 2023. We kind of saw this little break in home prices where home prices actually fell a little bit. Well, according to the most recent housing price data that we got as of March of 2024, what we see is that home prices today are at a brand new record high. So not only are home prices now at the highest prices we've really ever seen, we're still seeing mortgage rates at around 7%, which has people wondering, what is going to happen with mortgage rates? Are homes going to become more affordable? And how does somebody build wealth in America if you can't buy a home? Which are the topics that I want to discuss in today's video. So let me start by talking about what's going on with mortgage rates, because we all know that there's a couple factors that affect mortgage rates. One of the biggest and most prominent factors is none other than the Federal Reserve Bank, which is the central bank here in the United States, because they have the power to control interest rates. Not your mortgage rate, but interest rates. The interest rate that your bank charges when they lend money from another bank. So you can think of it like the wholesale rate that banks get to borrow money at. And the Federal Reserve Bank has raised interest rates significantly between 2022 and 2023 as a way to fight inflation. And there were a lot of kind of hopes by people on Wall Street that the Federal Reserve Bank would cut interest rates multiple times in 2024. They haven't done so yet. Well, in their most recent meeting back about a week or so ago, the Federal Reserve Bank said that they are not looking at cutting interest rates yet because inflation is still a problem. Inflation is getting better. They're on the winning side of inflation, but they're not ready to cut interest rates yet. But they also said that they might be cutting interest rates once in 2024, maybe around the election time. But also in addition to that, they also said that they plan to raise interest rates multiple times in 2025. Now, I don't want you to hold your breath, because sometimes the Federal Reserve Bank has been wrong. If you remember, they also said that inflation was transitory. That clearly wasn't accurate. And there's been multiple instances of the Federal Reserve Bank saying one thing and then another thing happening. So take everything that they say with a grain of salt. I just want you to understand what they're saying when it comes to interest rates. So mortgage rates today are still around 7%. Will we see some relief with mortgage rates in 2024? Only time will tell. Of course, we're keeping you updated on Market Briefs, which is our free financial newsletter. If you have not joined Market Briefs yet, it's a quick 5-minute read that breaks down what's happening in things like housing and the stock market and the economy and the crypto market and the global economy, to a fun, witty, and easy to read newsletter. It's free if you'd like to join. I got the link for you down in the description below. Second thing that I want to talk about is relief when it comes to potential home prices. And what you have to remember with home prices is that home prices are ultimately a byproduct of supply and demand. You might think that your home is worth $500,000. But if nobody's willing to pay you more than $250,000 for your home, is your home really worth $500,000? See, it's subjective in that sense. And when we have a lot of buyers and not that many sellers, that can push home prices up. And that's still kind of the situation that we're seeing today in 2024. It's not that we have this huge amount of people trying to buy a home. It's that we have a lot of people wanting to buy a home relative to the number of homes for sale. We don't have that many homes for sale. Now, there's a couple of reasons for this. One reason for this is we just don't have builders building homes at the rate as they were previously. Why? Because some builders are worried about how mortgage rates are going to affect the future of the housing market. Some builders are less confident. And then you also have home sellers that are just saying, I don't want to sell my home because I have a 3 or 4% mortgage. If we sold our home today, that means we're going to have to go out and get a new 7% mortgage. And we don't want to have to do that. So you have a lot of homeowners that are kind of deferring the move or selling their home because they have a low mortgage rate. And so when you have this lower supply, the demand that we do have is pushing home prices up. And so this is where, if you want to really understand home prices, you got to understand the factors that impact demand and the factors that impact supply. And there's a lot of different factors that can do that. When it comes to demand, you got to look at the economy. If people still have jobs, if people are still getting raises, if people still feel confident about the stock market and the economy, people are more likely to buy a home because they feel confident in their ability to make the mortgage payments. If, on the flip side, supply starts to rise, either because now builders start to get more grants from the government, builders feel more confident in the economy, or maybe because people are being forced to sell, partially due to foreclosures, that could increase supply. So this is where you want to understand, when you have more buyers than sellers, more demand than supply, home prices are pulled upwards. When you have more supply than demand, more sellers than buyers, home prices are pulled downwards. Those are the factors that you want to pay attention to, which brings me to probably the most financially important topic of today's video, which is this whole idea of building wealth through your home. Because owning a home, building equity in your home, and building this generational wealth has been long regarded as the American dream and the way that you can build wealth, because if you own a home, you can pay it off and pass it down to your kids. But there's a couple points that I want you to understand here, which is, number one, wealthy people, actual wealthy people, are not talking about how they got rich because they paid off their home. They talk about how they got rich because they built a business, they bought stocks, they invested in rental properties, or they bought other businesses. That's how they build real wealth. They never talk about how, we paid off our home, so we built wealth. And if you look at the majority of middle-class people, what do they talk about? How do you build wealth? It's, I'm working to pay off my home that I can pass down my kids. Now, I'm not saying home ownership is bad. I want you to understand home ownership and the real impact of owning a home and building wealth, because I don't want you to look at owning a home as a wealth building tool. I want you to look at it as a tool to own a home. Kind of like buying a shirt. You don't want to rent shirts. If you want to own shirts, that's good. But you got to make sure you can afford whatever it is that you're owning. So let me explain what I mean by that. Because the first thing you got to understand is banks are not stupid. Because when banks give you a 30-year mortgage, you might think that now every time you make that $3,000 monthly payment, you're building equity in your home. But the reality is banks front load their mortgages. What that means is for the first 14 and a half years of your 30-year mortgage, the bulk of your monthly payment is not going in equity, it's going into your banker's pockets with interest. So when you make your first $3,000 monthly payment, only a few bucks are actually going to build equity in your home. $2,990 some are going to be going directly into your banker's pockets for interest. It's not until you're almost 15 that half of your monthly payment is going to build equity in your home. So for the first number of years, you're just paying interest into the bank's pocket. And if after, let's say, year 8, you refinance your mortgage, well, now you're starting the process all over again. So when we talk about building equity, I want you to really understand if you are building some true equity in your home. The second thing I want you to also remember is that just because you own your home outright doesn't mean that you don't have any additional costs. Because if your home price is going up, it's great. But remember, you don't actually realize the value of that until you sell your home. And then when you sell your home, you sold your home. But as home prices go up, you still have to pay higher property taxes and higher property insurance. This is why so many people who inherit a home end up having to sell the home because they can't afford the property taxes and the insurance, because now you need an income to do that. Again, it is great to own a home. it is great to pay off your mortgage. It's great to not have to pay for that mortgage, no longer a monthly cost to live. But that doesn't mean it's going to be a surefire way for you to build wealth. And the reason behind that is because so many people end up buying a home so big that now when you have your monthly mortgage payments, you no longer have money to put aside into your investments, into the stock market, into other real estate investments, into building a business. And so what I don't want you to do, the ultimate bottom line, what I want you to understand is if you're going to buy a home, great. But don't use it as an excuse to no longer invest money into other assets, because your real wealth is going to be built through owning other assets, through stocks, through real estate investments, not the home that you live in, real estate rental properties and businesses. It's not going to be through your own home. So understand how a home works. You're buying a home to build memories. You're not buying a home to build wealth. If you go in it with that mindset, you're going to buy a home that you can afford. And if you can buy a home that you can afford, you'll continue to have money to keep investing your money. That way you can build true wealth and not rely on this home that you live in as an asset to pay for your kids' college. I want you to own real assets, build real wealth, and not fall into the same trap that the majority of Americans are making.